But first up, let's talk markets and invite Rohit Srivastava, the founder and strategist at IndiaCharts.com, on the show now. Rohit, morning. Your thoughts now on the Nifty. We've been talking about India's outperformance relative to the global markets, but it's been volatile over the last few days, and fundamentally as well, we've started seeing the FI sell in the cash market. How are you reading the setup right now and the key levels, the way forward?
So this has been a pretty strong technical rally, I think, from the bottom in June to the peak that we've seen in late August. The high that we've made, I think 17,992, might pretty much be the top for the time being. I doubt much that we'll go past it, though we have seen the Bank Nifty, mid and small cap stocks actually go a little above those highs. But this non-confirmation between Nifty and other indices tells us that, we're still not out of the woods here. So like I said, it was a technical rally. You had an extreme negative short position which got squeezed, and then that rally's actually extended itself a little bit, making it look like we are probably outperforming the rest of the world. But going forward, like I said, we may have peaked here. We're in the process of, I think, exhausting that momentum, and most momentum indicators diverging negatively with price action across sector indices tells us that we should start seeing things cool off, and then we probably see our market also catch up a little bit with what is really happening and likely to happen over the next couple of weeks, in terms of global market action and, all the policy action that is coming up over the next 2 weeks. So I think we are pretty much done here trying to discount our strengths relative to what is happening around the world, but we cannot really remain disconnected for a very prolonged period of time, and which is where I think the catch-up is really going to happen.
Rohit, good morning and thanks a lot for joining us. This is Pavitra. Also, take us through your call on what's going on with the Nifty Bank. Of course, for a while we were talking about that sharp rally that we saw, but what are the levels that you would look at now on the Nifty Bank?
So I think somewhere between 39,000, 40,000, 40,000 odd, I think should be a major resistance. I don't think we should go much above 40,000, probably head lower from here. So the major support we'll start looking for, I think, is going to be closer to the 20-week averages, and when the pullback in indices takes hold. So those levels for the Bank Nifty at around 36,500, and for the Nifty it's at around 16,700.
Hi, Rohit, morning. So if the call is that, the Indian market will probably catch up with the kind of, pessimism we're seeing globally, how much lower do you think we could go from here? And, what is the probability?
I think the probability is pretty high in my mind. A lot of people are sensing that this outperformance in, mid and small cap stocks is a sign that things are a little bit rosy, but as I said, the Nifty has not really taken out the high it made almost 2 weeks ago. We've stayed below the 17,992 level. That is probably the first pause. The other things to really watch out for are around various global factors which will affect directly our own macro, which is the currency and bond yields. I think both of them are pegged to probably weaken from here, which means higher bond yields are possible, and also a weaker rupee is possible. And in that light, I would think, the Nifty, the first thing that the indices do, like I said, is go test the 20-week averages, which is around 16,700 on the Nifty and 36,500 on Bank Nifty. That will be probably the first move. Now, whether that level holds or not would further determine how much further we're going to go down from there. My sense is if we do play complete catch-up, then we are looking at a retest of, the 15,000 level that we saw in June. But of course, let's put that on a break of 16,700. That would open up more clearly. But that's how we're going to take it. First to the immediate support, which is at the 20-week, and then if that breaks, then we look at much further declines from there.
Okay, so the recent top of 17,992 is the peak, and the bottom or the near-term target could be the 20-week moving average of 16,700. Rohit, what about the dollar index? It's flirting with 110. What's the chart telling you?
So the dollar index is in a pretty strong trajectory because it's broken out of what we call a 5-year range that it was stuck in between 104 and the bottom end maybe around 88, 87. And breaking out of that in 2022 sort of sets it up for a course that could see it going much higher. If we just measure the size of that range, then it would help us project all the way to 124. Now, that may not happen immediately, but you'll probably give it, say, around 6 months for that, something like that, to play out, which would then happen on the back of, weakening currency pairs. We've already seen both the yen and euro play the most significant role. I think the next two that are going to play a role are going to be the pound and the yuan itself, which is the Chinese one. So this USD CNY is among the currencies which has started to weaken recently, and I think that will probably join in driving this currency war that we are seeing.
Rohit, one sector that I want to ask you about is the auto pack. We've seen that huge rally come through, even in the auto ancillary names. When you look at these stocks, do you think that there's a lot more room left for them to rally, or do you think that we've maybe seen most of the gains come through?
I do think a lot of the gains for the time being are done. If I'm really anticipating a serious pullback in the main indices, I think the auto pack would not go unscathed by that. So I think there will be a negative impact on the auto sector as well, and we would probably want to wait for that to happen before adding any further bets on that sector.
What about defense?
So yeah, this is the popular question. If you're bearish on the market, where do you really hide? And my sense is, because the next leg down driven by global markets could be one where you will probably find it very hard to find a hiding place. But defense is one of the sectors that, when you actually go into a cycle degree bear market, geopolitical risks tend to rise, and for that reason, I think the allocations to defense expenditure also have jumped up and might probably remain elevated, which is probably the only place I would think on top of my mind where I would want to hold on to some investments. And I think the entire pack there has done well. Even if it does pull back with the market, I think it will tend to outperform on a relative basis, falling less and maybe gaining more over a period of time. So I think that's the only sector I would allocate to.
Another space that we have been talking about a lot is, the entire revenge travel, all of these hotel companies, air companies. Do you think any of them look exciting right now at these levels? Of course, they have run up significantly, but would you look at them right now?
Yeah, so for the last 2 years, we'd been invested in, say, Indian hotels, for example, just as an allocation towards that sector, and that's done pretty well. So my sense is that the whole problem here is, for example, we are all traveling a lot, especially a lot of foreign travel also happening. But as you can see, the costs of travel are incrementally going up. So a lot of this demand that we have seen, which is because of the 2-year lockdown, somewhere I think you will see a peaking of that and a flattening out, and so there's room for a correction. I think with the market in general, it's not possible that a market goes through a deep correction and in some of these sectors don't pull back a bit, but they will remain on top of the mind, I think, for staying invested in over a period of time. So as and when they do pull back, I think they would be an attractive place to be in.
All right, Rohit, we're going to leave it at that. Thank you very much for joining us and taking us through your call on all of these individual sectors and telling us